Now let's move to Palantir. Palantir, we took a trade on last week, if you guys remember. I said Palantir's been on a tear. We did, however, see a triple bearish divergence. So that just occurs when we see these 3 higher highs, but the RSI or our money flow, whatever oscillator you're using, that will make a lower high. So I said we sold cash secured puts last week for $15, has been a solid support level. As well, massive accumulation of volume is placed right there, and I believe we'll see a short-term bounce for Palantir and a further fade down to $14 or $11 after the subsequent bounce. So there's different ways that you can play this though. One is call credit spreads. Once we get a bounce, you can use the 11 SMA as a trailing stop loss to go short. So let's say that we were to bounce back up here, we would use this 11 SMA on the move down to as our support, or I'm sorry, as our trailing stop loss, or you can use the 2.5 ATR or average true range stop loss, which is what you can see in blue. So basically we would want to see the push to 16, we would want to go short, and we would want to use this SMA as a trailing stop loss and hopefully ride it down to $11. That's really what we're looking for. You can do that with spreads. You can do that by selling calls if you have shares. You could do that by shorting shares. But if you're going to go short or play directional options, which I say in options number 2 and 3, you're going to want to be a little more selective. In my instance, I'd want to see this push to at least 16, preferably 1650, and catch its way up to the 11 SMA and go short right around there.